get ready for some big news. Taiwan Semiconductor Manufacturing Company, the world's largest contract chip maker, is on track to report a massive 27% jump in fourth quarter net profit. We're talking a record-breaking 475.2 billion TWD, or about 15.02 billion US dollars, when they release their earnings this Thursday, January 15th. This isn't just a one-off. It marks TSMC's 8th consecutive quarter of profit growth, clearly showing how the insatiable demand for artificial intelligence infrastructure continues to power this semiconductor giant's performance. As Asia's most valuable listed company, with a staggering market capitalization of around $1.38 trillion, TSMC will also be sharing their first quarter and full-year guidance during the earnings call.
Revenue beats expectations on AI and iPhone demand. Just last week, TSMC gave us a preview, reporting that their fourth quarter revenue surged an impressive 20.45% year-over-year, hitting 1.046 trillion TWD, or roughly 33.11 billion US dollars, comfortably surpassing Wall Street's forecasts. Their full-year 2025 revenue is projected to reach 3.809 trillion TWD, a substantial 31.6% increase over 2024. This stellar performance is largely due to the full utilization of TSMC's 3-nanometer production capacity, fueled by chips like the A19 for Apple's iPhone 17 series, alongside consistently robust demand for AI applications. Galen Zhang, a senior research manager at IDC, put it simply: the main driver is the explosive growth of the AI server accelerator manufacturing market, which he projects to grow a staggering 78% year-over-year in 2026. In fact, IDC has even upped its forecast, now expecting TSMC's 2026 revenue to grow between 25% to 30% in US dollar terms, up from a previous estimate of 22% to 26%. Analysts bullish despite margin concerns.
It's no surprise then that Wall Street remains overwhelmingly positive on TSMC. JP Morgan recently hiked its price target, now eyeing NT 2100, while maintaining a buy rating and projecting a robust 30% revenue growth in 2026. Goldman Sachs also elevated its target to an impressive NT 2330, citing TSMC's multi-year growth engine in artificial intelligence. TSMC Chairman and CEO C.C. Wei himself has emphasized the extreme tightness of AI-related capacity, telling investors that everything related to AI, from front-end to back-end capacity, is very tight. Shea Ballor, chief market strategist at Futurum Equities, echoed this, noting that AI demand is clearly accelerating and TSMC continues to gain significant share at the leading edge, especially as competitors like Samsung Electronics struggle to keep pace. However, Ballor did offer a word of caution. A faster-than-expected ramp-up of overseas fabs could potentially dilute the margin gains anticipated from TSMC's upcoming 2-nanometer node and its pricing strategies.
U.S. expansion and geopolitical considerations.
Looking ahead, TSMC is making massive investments, pouring $165 billion into building state-of-the-art chip factories in Arizona. This represents the largest foreign direct investment in a greenfield project in American history, and U.S. Secretary of Commerce Howard Lutnick recently indicated that the company is set to invest even more into the country. With key customers like Nvidia and Apple relying heavily on TSMC's advanced manufacturing capabilities for their most critical chips, the company's global significance is undeniable. While Taiwan's exports to the United States are generally subject to a 20% tariff under President Donald Trump's trade policies, thankfully, semiconductors are excluded. Reflecting its strong performance and future prospects, TSMC's Taipei-listed shares soared last year, gaining an impressive 44.2%, significantly outperforming the broader market's 25.7% rise.